Hello, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. This is a Forex quick look. We're going to take a look at the euro versus U.S. dollar as the markets continue to swing back and forth in trading after the U.S. jobs report today. Looking at the euro versus U.S. dollar on the hourly chart in my report, before and after the non-farm payroll, I spoke about this swing area as being a level that needed to get to and through. And indeed, the price did move below the lower end of this swing area at 0.9733. It also broke below the old trend line here that held resistance until breaking above in earlier this week. That trend line and the swing area was broken both near the 0.9733 level, and the low price for the day reached 0.9725. But momentum cannot be sustained, and the price started to rotate back toward the 50% retracement of the move up from the low price that we saw last week and the high price that we saw in trading this week. That 50% came in at 0.97667, and as you can see, the price tried to stay below that level, but then rode to the upside and retested the 200-hour moving average. If you listen to my post non-farm payroll report, I outlined this level as the level that the price needed to stay below in order to keep the sellers more in control. And indeed, the price had moved up to it and stayed below that level, and we're starting to see another rotation back to the downside with the price trading just below the 50% retracement level here. So we're not exactly seeing a lot of momentum in one direction or the other. In fact, the price is trading probably in the middle of the trading range right now, with the high up here and the low down here. We are lower on the day. We did stay below the 200-hour moving average, and that for me keeps the bias more to the downside from a technical perspective. If the price were to move back above the 200-hour moving average and above the closing level from yesterday, that would change the technical view for me and for a lot of traders out there, and have traders scratching their heads wondering why the dollar isn't going higher after the better than expected report. So we are still listening to the price action, and that's what all good traders do. But on the downside, we do need to see more momentum to the downside and break below the 0.9733 level with a little bit more momentum than what we saw in here trading here today. Also getting back below the old trend line would be something more in the negative direction and increase the bearish bias. Getting below the 61.8% retracement is our another target on the downside to kickstart perhaps another move toward our low prices for 2002 that we saw bottom on September 28th. A lot of way to go to that level. We're currently at the 50% retracement level or just below it. So, half above, half below, but the bias is more negative for this currency pair. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.